Omowonuola Tunde-Bello, Portfolio Manager, Hill Denham, joins me to gauge investor sentiment. Thank you so much for still staying with us, Omowonuola. We're seeing quite a bearish move here, especially looking at regards to the offset sentiments by sell-offs we're seeing in the banking sector. GT Co, also looking at FBNH, Access Bank, UBA. It's not unconnected to the move by the MPC, talking about what we should expect in the banking sector, looking at an adjustment of 32.5% for the CRR. That's quite a lot to take in.
I guess, David, you're very correct that we saw some negative sentiments in the market today. The market actually priced in a rate hike of about 50 basis points to 100 basis points. So we did expect that investors would stay on the sideline in the market today just to gauge the trajectory, interest rate trajectory and the outcome from the MPC market. So the market dipped by 11 basis points today to close at 15.09% year-to-date return. In terms of value traded, Zenith Bank led the pack with the most value traded at about 30% of the trades on the exchange in the market. You've rightly spoken to sectorial performance. So the banking sector closed negative at 0.65%, followed by consumer goods also closed negative at 0.52%. Other sectors marginally closed positive, except from the insurance sector, which remained unchanged. So we largely expected this to play out in the market, given that the MPC was meeting today.
And let's talk through the fate of the banking sector now, because those have remained the most favorable stock, looking at the other sectorial performance. But going forward now, especially as we are tilting towards Thursday's mop-up of liquidity, how do you see things playing out, really?
It's really a very challenging environment for the banks. I mean, you have the cash reserve ratio has just gone up to about 32.5% from 27.5%. What this means is that the cost of funds is going to go up. You're going to see a lot of pressure in terms of net interest margins from the bank. So you're going to have cost of funds go up. You're also going to have, the CBN was trying to tighten the entire liquidity. So the cash that banks had available to play in with non-lending activities would also reduce. So you're going to have banks who have a very high deposit base, especially from institutions, suffer more than banks whose deposits is constituted by retail investors. You're also going to find that, this could be offset by, if banks who borrow to critical sectors of the economy can, offset some of these pressures that we're going to see in their net interest margins. So I think it's a very tough environment for the banks. I think they're going to come under a lot of pressure going forward. Trying to navigate this environment will be tough going forward for the banks. And so we're going to see lots of sell-offs from the bank. I think you should see a lot of sell-offs in the banks across board by tomorrow.
And for your forecast as well, you say bearish sentiments will still continue to linger on. Yesterday's bullish move was just a flash in the pan, isn't it?
Yes. So, you had markets really, markets have been selling off since the beginning of the quarter. Most of these names have touched very attractive entry points, very low points. And it was just normal that we could see a correction. And it was a technical correction that we saw yesterday. Going forward, high interest rate environments never really bode well for equity market. You find that fixed income instruments are more attractive than equity markets, and you might see that rotation going forward. You also have a situation where, it's election period, and this also causes a volatility in the market. While some might argue that the kind of volatility we've seen in the past would not be as much as we'll see now, given that domestic participation is more than a foreign investor participation. But it's also a source of concern. The forecast going forward for the equities market is that we continue to see this bearish sentiment till the end of the year, at least.